Hi everyone, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 47th COT report in 2013. And as usual, we're going to start off with the changes in commercials positions. So here we go. Soybean meal is our first market. We have a 23% change in commercials positions. An even greater change in large speculators. You can see the changes over here. Actually, a few reports ago, you may remember I was talking about a nice bullish signal from the chain side. Back over here, commercials moved from roughly 60-something thousand contracts net short to 40,000 contracts net short. So that was a large change. We do see large changes in soybean meal if you look at this one-year chart. And I was showing you a few examples how well these changes basically preceded changes in the prices. So basically over here we had some good examples of larger changes preceding this rally, and of course the opposite could be true as well. Question is, would this change affect prices? Will we see prices declining from here? That's a good question. Actually, if we open this 5 years chart, you're going to see that basically we were at a relative extreme, nothing too big, not an all-time extreme, but still, if we would be looking at just a 1.5 year range, you can see that we had sort of a bullish type extreme in the market. And of course, technically speaking, we had a very nice support level, a good risk-reward trade. So anybody taking that trade a few reports ago may have made some pretty decent profits on soybean meal. Moving on to 5 year note, we have a 22% change in commercials positions and basically the same change size in large speculators and small speculators. You can see basically commercials and large speculators both being net long, only small speculators taking the short side of the market. That in itself sounds kind of basically bearish bullish because only small speculators are pessimistic about the market. But if you look at this chart, you can see that quite some time that's the case. Small speculators are the only ones taking the short side of the market. Opening a 5 year chart, let's see everything in a wider perspective. Here you can find this beautiful large COT Extreme a couple of months ago, basically putting an end to this decline. Since then we are seeing prices rising. Question is this going to be continuing? Well, if you look over here on the chart again, technically we have an important level, an important resistance level over here. Would prices break that? That's a good question. We've moved away from these huge extreme territories, and of course in its sense we may be talking about a relative extreme, and if commercials would start increasing their net long positions again, we may see a bit of a decline in prices. The change in itself suggests that yes, we should see the chances of a decline are a bit larger than the continuation of the rise, just temporarily speaking. Of course, this large extreme is still valid. S&P 400, 18% change in commercials positions, and 15 in large speculators. Not large changes, nothing really too special. So I'm going to move on to the 5 year chart and see the extreme. Of course, we talked about S&P 400 quite some time in the past couple of reports. We were at a huge extreme a few months ago. We are still very close to those levels. Prices did not react. Stress levels are very high in indexes these days, so of course a decline could happen anytime. Of course, it would be more obvious if we had an all-time COT extreme in these markets. We don't have that yet. We may see the extreme widening in the upcoming few weeks. Actually, not much to tell from these charts right now. I can't help you this week. Let's move on and have a look at large speculators COT Extreme. Here we go. The Japanese yen is on top of our list. 332 report extreme in large speculators and 335 report extreme in commercials. Opening a 5 year chart, let's have a look at these extremes on a wider perspective. And hey guys, I talked about Japanese yen. I'm not sure, was it a week ago or 2 weeks ago? But I told you, even though we have this huge extreme in the market, still prices are declining. Remember back over here, there was this commercial capitulation over here. Prices did not react to this large bullish extreme, and they just plunged. And that's why I was talking about the fact that this happened, and the stagnating of this extreme does not really suggest that the bottom is here. I mean, it could be. It's very hard to tell, but just by looking at the chart, the feeling is the decline may continue for quite some time, maybe. But let's move on and have a look at the Eurodollars. We have a 103 and 104 report extreme in commercials and large speculators. Opening a 3 years chart, it's going to be a bit more visible on the 3 years chart. Here we go. You can see that we are reaching pretty large extreme levels, bullish type extreme actually, which is quite interesting looking at this chart. But if you look back over here to the end of 2011, here was a very nice bullish type COT Extreme, which put an end to the decline. And now, well, it's quite hard to tell how or where prices could increase more, but that's the picture. That's what the COT is telling us. So that's the Eurodollars. Let's move on and have a look at the Chicago wheat. We have a 79 report extreme in large speculators. So not a huge extreme, but hey, let's look at the 5 year chart and see everything on the charts. Here we go. Actually, was very nice and good idea to open the chart. You can see that basically we've reached an important level in the COT because whenever commercials were at such levels, of course, large speculators, similarly speaking, that usually coincided with a bottom in prices. A few months ago, I've been talking about this picture because you can see back over here, the situation was very similar, but you can see prices reacted. We are again at these levels, an important, we may find important, technically speaking, support levels. So I would say the stress level is there. Prices have that kind of a backup or support from the COT analysis right now. I would say the chances of a increasing prices the upcoming few days, just by looking at the COT, maybe a bit larger right now. Okay, that's going to be all for this week. I will not show you any more COT charts, but you can have a look at them at our COT charts page. Of course, if you would like to have a more in-depth and detailed COT analysis, well, hey, check out our COT analysis page, where you can add other very useful functions to our table: the long-term trend, volume and open interest scores, or the COT index. You can look at new COT report types, data types, do your historical analysis and look at old COT reports. And of course, you can look at market complexes, a lot of great functions. Really check them out. And I hope to see you, well, I wouldn't say next week, this week, because today's report was a bit late. CFTC published or issued it today, basically an hour ago. So we should be meeting up this weekend. So have a great week. Take care. Bye-bye.